Reserve currency, that's the position China has openly declared it wants for the yuan. They want the yuan to become a global reserve currency. When you see this headline, you can't help but think, wait, really? How are they going to do that? Is it even possible? Are they actually serious about this? And ultimately, the biggest question is, if they really go through with it, would that really be a good thing? Because right now, the world's current reserve currency is the US dollar, right? And now, out of nowhere, China is announcing that it wants the yuan to become a reserve currency. Why is that? Is it because the dollar seems to be weakening right now? Is that really true? No one really knows for sure, because someone actually asked Donald Trump about it. Like, hey, is the DXY, the dollar index, too weak right now? And Trump said, no, it's just right. It's actually really good for the economy. That made me think of, there's one asset that doesn't require any effort or fighting with anyone, but it seems like people all over the world want to pour their money into it and push for it to become a reserve currency, and that's gold. So the question is, if China and the US are going to go head-to-head like this, should we be adding more gold? Or maybe not? Watch this video until the end and we'll get the answer together, straight from the world's most confusing situation. You can support the research on reserve currencies, whether it's the yuan, the dollar, or gold, on the Sci Money Monster channel by scanning this QR code. Or if you want to support the Sci Money Monster channel in a super easy way, just hit like, share, or leave a comment to chat and have fun with us. You can even save it to watch later. But what I'd love for you to do most, yes, please hit the subscribe button so that when I upload the next video, we can meet again. Sound good? Thank you. Let's get right to the point. I'll start with the challenger, which is the Chinese yuan. China has openly declared that it wants to dethrone the US dollar as the world's #1 reserve currency and replace it with the yuan. This information comes from past statements by President Xi Jinping of China, who said that they want a strong currency that can be widely used for international trade. It can be invested in international exchange markets and serve as a global reserve currency. In fact, President Xi Jinping of China made this statement back in 2024, but it was only recently published for the public through the Communist Party's magazine called Xuxi, which caused quite a stir worldwide. Seeing this, the first question that comes to mind is, if the Chinese yuan really does become the world's reserve currency, would that really be a good thing? Because some people say the reason money has lost its value and inflation has spread is because the US printed way too much money. Since the dollar is the world's reserve currency, if the dollar inflates, everyone else does too. If you ask whether they really print that much, just check the M2 money supply graph. They've been printing like crazy, but I want you to look at another graph, this one right here. It directly compares the money printing between China and the United States. If you think the US has been printing a lot, China has been printing even more. If the US dollar is the world's reserve currency and has already caused currencies around the globe to lose so much value, imagine if China, which is printing even more money than the US, were to take that role. There's a high chance that money would lose its value even faster than before. But anyway, that hasn't happened yet. The yuan still isn't the world's reserve currency. Still, it's interesting to consider just how likely that scenario could be. So let me start with the size. The size of the current champion, the US dollar, and the challenger, the yuan. The US dollar is the #1 reserve currency in the world. According to data from 2025, nearly 56% of the world's reserves are held in US dollars. As for the yuan, the challenger, it does have some status as a global reserve currency, but it's only at 2%. But there's something else we need to look at, this 2%. China's 2% compared to the US dollar's 56%? Okay, if you just look at the numbers, the difference is huge. But if you look at the trend, the US dollar is currently at 56%, which has dropped from 72%. It's been a downward trend for a long time. Meanwhile, the Chinese yuan is currently at 2%, but that's 2% up from just over 0%. That means the yuan is on an upward trend. So if you ask whether China wants to push the yuan to become a reserve currency and what China has done about it, well, China actually has a roadmap. They've laid out a plan for how to make the yuan one of the world's most popular currencies. It started with what President Xi Jinping said in 2024, which I just mentioned. China wants to create a strong currency that enables international trade all over the world. And there's also investment in foreign exchanges. So has China achieved this yet? Yes, they have. You can easily notice this if you look around at people in the finance sector. There's a lot more talk about Chinese stocks now, right? Or some brokers have just started allowing people to trade Chinese stocks. More and more people are interested in owning Chinese stocks. And if you ask whether the yuan can be used for international trade, the answer is yes. In fact, it's challenging the US dollar more than ever before. The Chinese yuan can now be used to buy oil, whether it's oil from Iran, Russia, or even Saudi Arabia. These days, it's no longer necessary to trade oil exclusively in US dollars. Some transactions are done in yuan. All of this is happening because of the economic infrastructure and forward-looking plans that the Chinese government has put in place. Ever since President Xi Jinping made his announcement in 2024, a roadmap has been established. There are 4 specific and simple conditions that President of China Xi Jinping assigned for the Chinese government to achieve. The first is that the People's Bank of China must become a central bank with significant and substantial power, capable of exerting influence that impacts the entire world. The second is that there must be a highly efficient financial system. The third condition is that the banking system must not be dependent on anyone, and by anyone, that specifically means not relying on the US dollar. This is probably one of the reasons why China has been consistently selling off US government bonds. And the fourth condition is that China must make its stock market attractive and appealing to foreign investors. Like I said before, can they do it? Of course they can. Now everyone is starting to talk about Chinese stocks. But after hearing all this, the next question is, wait, if they've been talking about this since 2024, why are they only now making it public and letting the world know in 2026? Could it be because China sees the US dollar as being on the ropes, starting to lose its footing? Because in 2025, the DXY dropped by more than 10%. And in the second week of January just passed, the DXY really took a nosedive. The DXY, or the dollar index, hit its lowest point in 4 years. So maybe China thinks this is the perfect moment. Like, hey, the dollar slipped up, right? Now China can step up and show off. Like, look, we can make the yuan look strong and stable. Honestly, it's a message that makes people feel like someone's coming out and saying this. This one's pretty good. Want to take a shot at it? It's like after hearing that, you start sweating, like, what should I do now? But let's talk about size again. Because even if the yuan is really trying hard to compete with the dollar today, when you compare their sizes, there's a huge gap. Like I mentioned before, the dollar makes up over 56% of the world's currency, right? That's about $6 trillion. Meanwhile, the yuan, as a reserve currency, is only 2%. That means it's just under $250 billion. So, in my opinion, it's still a long way off. Back to the $1. At first, honestly, when I saw $1 drop this much, I almost didn't even question whether the dollar was doing badly. I just assumed the dollar must be in bad shape, because it didn't just drop a little, it fell to its weakest point in the past 4 years. You can see it clearly, right? It dropped off a cliff, like a Niagara Falls waterfall. That's how steep the fall was. It's not strange for us to think it's bad, right? But it made me start to wonder, because there was a journalist who asked Donald Trump about the drop and depreciation of the dollar. The journalist asked Donald Trump like this: "With the US dollar weakening this much, do you think it's a bad thing, Mr. Trump?" But do you know how Trump answered? He said, "No, it's not bad. It's actually good. Good for the economy." Let's listen to what he said.
All right, that sounds really good to me, actually.
Well, there you have it, folks. When the president of their country says that their currency dropping this much is not necessarily a bad thing at all. So we have to look for more information, right? Like, if it's not bad, what does not bad actually mean? So I went to find out whether, honestly, a weak dollar is actually good for the United States or not. And I found some information. This information says that concluding the US is in trouble just because the dollar is weak is only half right. Because when it comes to a weak dollar versus a strong dollar, whether you say America is in trouble or not really depends on what kind of outcome you're rooting for the US to have. Let's talk first about the people who think a strong currency is better. The idea that a strong currency is better is kind of the original American way. Let's call it the traditional America. It's the financial life America, the United States that focuses on being part of the financial system. A strong dollar is considered good and makes the country more powerful because when the US dollar is strong, imported goods become cheaper. When imports are cheaper, it means Americans have more purchasing power to buy products from abroad. With greater purchasing power, people feel richer, like, wow, everything is so cheap. When everything seems cheap, Americans can borrow more. And when they can borrow more, US Treasury bonds or government bonds sell better and in greater quantities. And this leads to increasingly larger debts. Then, whether it's the US dollar or US debt, they both see a significant surge in demand. More money flows into the country, which causes US assets, stocks, bonds, and various other holdings to inflate. Asset prices go up. This American financial system model only functions effectively when the debt, money, and assets of the United States need to have continuously high demand, never-ending demand. That's why some people, like me, think that America has always lived this way. If all of a sudden the dollar weakens and people no longer want US debt, then America would really be in trouble. But actually, a weaker dollar could also be an advantage for the United States. That's because there's another type of economy called a productive America, or an economy based on producing goods with real economic value for actual trade. In this scenario, the US could really set up factories, because when the dollar weakens, labor costs go down too, making it possible to lower the cost of producing goods and be able to compete with other countries. If you've been following since Trump's US election campaign, this actually lines up pretty well with Donald Trump's goal of bringing all sorts of factories and industries back into the United States. And it just so happens that this lines up with the current period where the United States is saying no more globalization. I want to be rich on my own, be the best on my own, and bring everything back into America. Well, if the currency's weak, it makes it easier to compete with others. Exactly. If America actually becomes productive, instead of money just flowing into assets, making stocks expensive and bonds sell well and all that, it would be the opposite. The money would actually help drive the real economy through trade and real production of goods that benefit the people and the world, actually selling real products like that. So if the dollar weakens, who benefits? The industries benefit. Companies that actually produce quality products will benefit. But for someone to gain, someone else has to lose. So who loses out? Anyone who deals with credit and lending, like banks, and anyone who profits from asset prices constantly inflating, like brokers, hedge funds, exchanges, and various investment funds. So if the US dollar weakens, the first group that probably won't be able to handle it are these people. The front line is the banks. If they're not big enough, there could be a wave of bank failures in the United States if the currency keeps weakening. But for the really big banks, even though they lose out, there might be some pushback. Oh, and another huge advantage of a weaker currency is that it can actually reduce the real value of the United States debt. So if you ask again whether a weaker dollar is good or bad for the US, I'd say it's good if the US is willing to shift its strategy to a long-term game, focusing on producing truly high-quality goods and services to compete in the global market. But it could also be really bad because making the transition from the traditional American way of doing things, where the currency has always been strong, has been the way for over 100 years, and they've benefited from US assets getting more and more expensive. This transition, I guarantee, will be painful and cut deep. And no one really knows. If this transition actually happens, it could take decades, maybe even several tens of years. So can we sum it up? Is a weak dollar really a disaster or not? If you're still unsure and keep going in circles, just replay the clip and watch it again. So once you loop back to this point, you'll end up with the same answer as before. Honestly, I still don't really know how to answer. It really depends on what the leaders decide to do. But I have to say, that whole, honestly, I don't really know how to answer, that's actually the clearest answer there is. Right now, all of us are standing at a crossroads in the global economy, or you could call it a turning point in history, which doesn't happen very often. It's something that only comes around maybe once every 2 to 3 generations. So not knowing which way to go, that's actually the clearest sign of just how extremely volatile assets all over the world are right now. Honestly. Take the US, for example, the country holding the reserve currency. They're doing everything to maintain the rules, their power, and their money. But there aren't many ways to do that. It means they have to go to war, and not just once, but keep waging wars. Now, this brings us to the third reserve currency that I mentioned, the one that doesn't require fighting or doing anything at all. It's not about taking sides or favoring anyone, but it seems like the whole world wants to pour their money into this asset, and that's gold. Gold isn't tied to any country, gold doesn't default on debt, doesn't impose sanctions, and doesn't freeze anyone's assets. And right now, it's becoming very clear that the world is moving away from globalization and entering a multipolar era, or a world with multiple centers of power. That's why every country is trying to diversify risk as much as possible. In this context, diversifying risk means trying not to rely on the US dollar as much as they can. We've seen that, right? In recent times, central banks around the world have been hoarding gold like crazy. Even the Basel III rules have changed the way gold is valued in banks, from only being able to record half its value to now being able to record its full value. This has also raised the status of gold as an asset. If you want to learn more about this explanation, you can check out the Gold Corridor video. Now, at this point, there must be some people who have been watching from the beginning of the video and have just one question on their mind, which is, should we buy more? Because gold has been really sweet, right? It already hit over 80,000 baht per baht weight. But then on February 2nd, it dropped. It fell by 9%, which is a huge drop for gold. And then there's silver. Oh wow, that's super popular too. On the day gold dropped, silver fell even more. It plunged as much as 27%. In moments like this, a lot of people want to know, if something like this happens again, then should we buy more then? Let me explain it briefly like this. If you've been watching this clip from the beginning, you'll understand that even world leaders themselves aren't sure which direction to take or how things will end up. So volatility in assets is definitely something we'll see. But the main points we can observe right now are, for example, Donald Trump's policy. He wants Greenland and is butting heads with NATO. How will that all turn out? And even bigger than that, because it has serious political consequences, the Federal Reserve of the United States? Who will become the next Fed chair after Jerome Powell's term ends? Because the Federal Reserve's board of 12 people really does have a global impact on finance. So in the end, whatever you decide to invest in, whether it's gold, US assets, or Chinese assets, make sure to really pay attention to your own money. Is it hot or is it cool? And whichever side you choose to invest in, make sure to do your research thoroughly, because investing always comes with risks.